Good afternoon, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. Got to find my presentation, which it seems like I just hid unintentionally. It is Saturday. It is approximately 4:30, as you can see, and therefore, since it's Saturday, their futures are not out. I decided to try and get this done early so I can spend the day with my family tomorrow and not have to worry about doing this. Thanks for joining me, and let's go ahead and let's get started. I titled this week's Growth Leads to Summer Rally. Now, will this be a 1-week rally, 2-week rally? Will growth continue to do well? Haven't we been using growth? Well, we'll see, because I think there was a change in character since the beginning of July. Whether it stays or not remains to be seen. It's funny, I did have a lot of people reach out to me over the last weekend thinking that I was a little bit too bullish, and I probably was, but I got that setup that I like to see, which I'll show you as we go forward. But new week starting Monday, so let's see what's going on. As always, where's my disclaimer? This for education purposes only. Any recommendation in the sphere of education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading company. Tools demonstrate those that I use in my daily trading. I have paid for everything that I demonstrate. Trading involves risks. You and you alone are solely responsible. I'm not planning on going deep into options today, but sometimes I lose control and I just do what I don't think I'm going to do. But in case I do, I just want to remind you that if you are trading options, they carry, in some people's minds, higher risk. And I refer you to the Option Industry Council, which has some great documentation that you should be familiar with before you put your portfolio at risk. I like to talk about my influences, but most importantly, your influences. And up at the top, it says be your own guru. And that's how you need to approach your trading, life, business style, etc. You need to expose yourself to people that you trust. You need to get education. You need to grasp what makes sense to you and then put it together in a format that fits your taste. I started with CanSlim. It was approved by Morales and Catcher, by Ian Woodward and Ron Brown. I learned how to trade really. This is learned how to invest, how to find stocks with CanSlim, and how to be a trader. I learned from John Person. A little bit of money management from Van Tharp. Share the podium with George Lee, a great Canadian trader. And then a lot of people tell me they don't want to work as hard as I work. How can they find great stocks and when to trade them? And, I pretty much always say the same thing, which is, why don't you want to work hard? Don't you want to make money? But down here is Guy Cohn. He's got a couple of websites by these names, and he's sort of the easy button. He has some things that make a lot of sense and also has some CanSlim influence. And he's a very good teacher. What do I need on my desert isle besides high-speed internet? I like TradeStation, Thinkorswim. During the day, you'll see Genesis on. I can do things with Genesis. I can't do with the others, but most people won't have it, so I don't use it during these videos. HGSI is my favorite analytic program with EdgeRater. I do follow seasonality, but technicals trump seasonality, and those are some of the websites I use. A point about HGSI, I started doing unofficial volunteer support for HGSI, probably 10 years ago, if not more. And to this date, I still do a lot of work to help them. I'm an unpaid volunteer, and the reason why my email address is hgsidoc@gmail.com or jeffrey@highgrowthstock.com is because of my influence of HGSI on my trading. But I am independent. Here's the website for HGSI. Again, the software, not me. But on this website where my arrowhead is, there's this thing called Investing Strategies. And if you click on that, you'll see a list of names, including mine and Ron Brown. Both of us have different techniques, but a lot of videos of how we use HGSI to trade. It's a free program for 30 days, no credit card. If you don't have it, that's the little place to hit. Now, in a perfect world, stocks go through various stages. It's nice when the entire market behaves and goes through the same stages at the same time, and then you adjust your trading style to what stage in the market. This has been a crazy market where every time you think we're going to go into a downtrend, we take another leg up. I was betting, because the AD lines were strong and a few other points, that last week at this time that the market was going to go higher this week, and it did. But it's only a matter of time before we get that downtrend. And as much as I want to feel bullish, and as much as I'm a perma-bull in certain people's minds, I probably really am a perma-bull. I think right now it's about protecting your profits, being a portfolio manager, and being in the market, but being careful, because we keep truncating the top of this pattern, and just when it's over, it goes again. And then once we think it's over, it goes again. One day it's not going to go again. So you have to then be penetrating the market or playing the market based upon where we are in the cycle. I did go bullish on Monday, which meant I expanded the number of positions. They were bigger. I bought a lot of calls. But at the end of Friday, just being a little careful, I took profits and sitting on cash, and I'll deploy it again on Monday. And as much as it's nice to be in the position before it gaps open, you could have been out of like BZUN and AAOI, two great stocks that we talked about last week, and then just bought them at the open and made a lot of money. You didn't have to be in them over the weekend and carry the risk. Sector review, I kind of like to take a 30,000 foot view of how the market ended on Friday, and it's pretty obvious to me. Home building was weak, financials suck, technology, industrials, semiconductors remain strong, utilities strengthen, healthcare services look good. Interestingly, biotech 50-50. But as you look around, a lot of strength. And I'll come back to the story here, but if you notice in the lower right-hand corner, there are a number of emerging market ETFs. The rest of the world looks strong. Brazil, Spain, France, Europe in general, Latin America. And it's almost as if we should be having a higher percentage of our portfolio, perhaps, in international and emerging markets. It feel like that's the place where it's going to move more. Perhaps their economies will rebound better. Perhaps their easing story will be different than it is in this country. Now, last week, I took the argument that pulling back into the 50 had to be considered bullish, and we had the E-minis. The middle is NASDAQ futures, upper right is the YMs, the Dow futures, lower left is the IWM ETF, the VIX, and the dollar. And I talked about how, except for the NASDAQ, the three major indices were pulling into their 50-day simple moving average. And that, to me, in my style, I like to buy pullbacks to the 50 in an uptrend. And that the NASDAQ was below the 50, but if it broke through the 50, that might be impressive as well. You couple that with a VIX that is now down to as low as it gets, and a falling dollar, and things that you could hold, materials went up, and the stock market in general had a good week. And on the weekly chart, again, how am I supposed to be bearish when price is above the 17, which is above the 50 and above the 200 in all the major indexes? The VIX is down near 0, near 10, and the dollar's in a pretty deep pullback. So the markets are strong. Yes, I think the markets will roll over someday. Yes, I'm expecting a correction. No, I don't think we go straight to the moon from here without a pullback. But on Monday, I felt the markets were strong. I went all in, or more in than I was. I eased off the pedal a little bit, but I'm still leaning towards the bullish perspective. If I look at daily, weekly, monthly charts, top is daily, middle is weekly, bottom is monthly, and we got the NQs, we got the E-minis, the NQs, the Russell futures, NYSE, and the Dow futures. And again, I point out the lower left, upper right, big moves up, all of them in a weekly buy signal, all of them in a daily buy signal, all in a monthly buy signal on the major indices and the futures, as just a huge week last week for the bulls. Now, I said growth led, so here's my data to support it. On the left, I took the fundamentals on the market from December 30th, and then based upon those fundamentals, I stratified the market in EdgeRater and looked at performance tied to specific rankings. ERG is a combination of EPS rank plus relative strength rank plus growth rank. Each of them can be 0 to 99. 3 times 99, I think, is 297. I'm joking. It's 297. And historically, in a market that's good for growth stocks, the higher the ERG, the better the performance. Now, in this light gray line here, that's the number of stocks at a different ERG. So I usually throw out the lower and the upper, the lower and the upper. And I look at between, say, 280 and back down to 40. And what I see here is pretty much a flat line with some peaks early on in the lower ERG. Well, when lower ERG stocks are exceeding higher ERG stocks, that's not a growth market. If you look at EPS rank, yes, high EPS rank was good, but so was no earnings. The lower the relative strength on January 1st, the better the performance of your stock in the market this year, and no relationship to group rank. If you were distributing on January 1st, then you've outperformed for the entire first 6 months, 7 months. That is bizarre, and that's, sort of fits to me that if you underperformed in 2016 and you were junk off the bottom, you've outperformed to date in 2017. But what about the last 2 weeks? Notice that you have not a straight line, but essentially a ascending straight line of ERG. The higher the ERG, the better performance. Higher EPS rank, higher relative strength rank, and higher group rank over the last 2 weeks mattered. So this is a curve where growth leads, and this is a curve where it's value or junk off the bottom. So 2-week wonder or change in character. I'm a lot better when the market looks like the right, although it's been a pretty good year regardless. A little bit about the underlyings. So rates have been increasing off the bottom. They sort of paused this week as the economic data was a little bit tepid. And I guess perhaps part of the rally on Friday was hope that reason for the Fed to slow down rather than speed up. Now, I talked about last week how in both the small stocks and the large stocks, the AD line was going straight up, even though there was a pullback in the index. Well, that divergence worked its way out, or convergence, and what you have this week is new highs on both the indices as well as the AD lines. To me, that's bullish. Breadth. Now, the good news is on both stocks above the 200 and stocks above the 40, we're kind of in the middle of the range. So we're above middle, so breadth is strong, but certainly not overbought. However, if I look at the 13-week or 3-month new high, new low ratio, which has been uncanny, a prediction of short-term pullbacks in the market when it gets up to the 90% or higher, we're there. So this tells me that I would expect something to pause this market at least at some point in the next week or so. Doesn't mean there has to be a major crash. It's usually a quick change and allows working off some of these new highs and new lows. Now, if we look at the weekly McClellan, I guess the point on this one, indice goes higher. We have broken above the zero line on the oscillator. Summation index, lower lows, higher and lower highs remains to be seen where this is going to break. That's perhaps a fly in the ointment. The buckets, 2/3 of the stocks in the S&P 1500 are above the midline in their Bollinger Bands. And although we have about 7% above their upper band, I'd say we're not so far extended that we have to have a rebound. And this is clearly a bullish signal. The Hindis, which were firing a month ago, have not fired. And in fact, they worked off some of their negativity, and we now are not firing 3 out of the 4. So the number of new lows has dropped considerably. And on both the NASDAQ and the NYSE, a little bit of an all clear signal. The Woody indicator, which is this third band, looks at the major indexes, looks at the percent B times bandwidth, and it gives us a signal of to be in the market when it's green, out of the market when it's red, and to be cautious about chop when it's yellow. So we had a couple of days with large positive movements, which we call kahunas, which caused the market to shift to all green on the percent B and shifted us out of this painful red zone. Now, I wouldn't say we're in a buy zone here on the Woody indicator, but it certainly has improved. Sector strength, in addition to the market looking better, especially in materials, finance, and technology rather, we flipped to green on the sectors, and you notice there's no red sector, so sector strength is improving as well. About a month ago, we put together a leaders index, and watching this, assuming that this will break down before the market breaks down, and it bent, got a little bit below the 17 for 3 or 4 days, but we're back above the 8 and 17-day moving average and continuing to go higher. That's positive for the market, as is the fact that the canaries have resumed their uptrend. So I would say cautiously optimistic about the market here. Know your news and earnings dates. As I look at the left, I don't think it's a very big news week, certainly not compared to the one we just left. It is becoming a big earnings week. So I've got Netflix, which I have a position in, which I'll have to manage on Monday. We got Bank of America, which I have a position in, Goldman Sachs, United Health, CSX, UAL, American Express, and Qualcomm on Wednesday. One of the stocks I like a lot this week, Blackstone, is on Thursday, so I may have to wait until earnings are done to add to my position. And then, as I say in the lower right, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So my thought, market rallies last week as indices rebound off a rising 50 EMA. High growth stocks and leaders lead, replacing junk off the bottom. Technology remains my favorite area, at least until it stops working. Energy is stirring, mostly services and refiners, and some of these high earnings exploration companies like Diamondback, like Cimarex look kind of interesting here, but they would be purely bottom fishing. Complacency is here again, markets with extremely low VIX. We must be vigilant as a pullback and potential correction may not be far away. It's not exactly brick, but there is strength outside the US, especially Brazil, Europe, and Latin America, and overall emerging markets. Should have some exposure here, perhaps by ETFs or via ADRs. So that's my thoughts of the market. And let's take my top-down review. So first thing I like to do, as you're probably aware, is go into TradeStation. And in TradeStation, I like to look at the major indexes, and I have 5 or 6 signals that give me a sense of bullish or bearish on the market. So I'm going to play with a new tool I got here and work in here. And let's see, it's not exactly what it's supposed to do. Let me try that again. Here I am. I want to sketch on the screen today. So I wanted to start with, this is my sort of my 6 points, 5 to 6 points I look at. Number one, so hit that. All right, well, maybe I'm not going to be doing this. Oh, I'm supposed to turn this on first. Try one more time. That should do it. Let's see, eraser. Well, I guess It was working before, so maybe it doesn't like to work when I'm doing a recording. Oh well, never mind. Sorry about that. So here's my 5 or 6 points. Number one, PPS buy signal or sell signal. This is a John Person proprietary indicator. It is present on Thinkorswim as a freebie. It's not free on TradeStation. Green arrow's a buy, red arrow's a sell. So here's my daily in a buy, my weekly's in a buy, and my monthly's in a buy. Thing number two I look at is the color of the paint bar. Green, it's okay to be long or hold. Red, short or hold. Blue, you can do whatever you want. Green, green, and blue. So out of 6 possible positives, we've got 5. I look at where am I at within the outer envelope, auto envelope, and as long as we're within these dashed lines, I'm happy, and we're within the dashed lines on both the daily and the weekly. I then look at evidence of MACD divergence, which will show up as dots, red dots above. Convergence will be green dots on the bottom. We worked that off for the last couple of weeks. There's no MACD divergence. I look at my high jump bar and I see that I'm at 66%. When it's above 90, I get nervous. At 95, I sell. And then I look at my bongos, daily, weekly, and monthly. All of them are green. I look at the E-minis and say, what's not to love? Let's take a look at the YMs, at least right now. So very quickly, we got green buy signals, green bars here, except for the monthly. We're within the auto envelopes. I do have one of those MACD divergence dots coming in here. You'll notice that the market can go up a long time before those kick in and be a problem. It's mostly pay attention, don't necessarily change anything. Only 60, 59, 69, 59 on the high jump bar. So I think the Dow looks very good on this as well. The NASDAQ, which had been the laggard, turned green on Monday. Green with the green arrow, a new weekly buy. It's in a monthly buy. It's up to 68%, no dots. The NASDAQ looks good. And then the Russell 2000, green, 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 green. Within the envelope, no MACD 44. The Russell looks great. You want to see something that doesn't look good? Let's take a look at the dollar. You can see the dollar has been in a weekly bongo the entire time up here to the downside. Continues red bar and a down arrow, down arrow, down arrow. So you got multi-time frame sells and weakness. You're about as low on the low jump or the high jump as you could get. This is where I expect to see a bounce on the dollar. Notice these green dots here. There's some MACD convergence, positive divergence. So the dollar is weak, but it looks like it's at a place that might rebound. If we look at gold, gold should be super if the dollar is weak. I wouldn't say it's super, but gold did go into a buy signal this week. On Friday, you could see the MACD divergence dots. It's at 63%. But keep in mind, this is in a downtrend. This is a counter trend rally, which means be careful if you go long gold with both the weekly and the monthly showing weakness. And then just quickly looking at the VIX. The VIX is in a sell signal with a new sell signal on the bongo weekly. Red dots everywhere. The VIX just can't get ahead of itself. So according to this stuff, market's pretty darn strong. I open up my warehouse view and let's go into the Woodward. We'll come back to this. Don't worry if you're looking at what my buy choices were for this week. We go down to Woodward and Brown user groups and we go to Major Markets Plus. And let's go to the top-down view, which is all price and volume, heavily weighted towards one day. And let's see where the strength is. Wow, NASDAQ, NYSE, small caps. What's the weakness? Dollar volatility, bonds, utilities. A little bit bothered by the small caps being there, but this is a very strong market. You look at 5-day return, oil was up 5%, semis 4.7, gas was 4. The big loser was volatility and the dollar. So let's look at some of our favorites here. Let's start with the S&P 500. So a lot of this is repetitive, but I do it repetitively because I think the more I do, the more you learn. Just try this one more time real quick and see if it's going to work. Of course, you know, it was working when I tried this. All right, now it's working. All right, so good. So I'm going to be able to show you some things that I want to make sure that you guys are getting from these presentations. That's why I switched to this computer, make this line little. So let's erase what I got here, because I don't want a ruler. Okay, so first thing I want to show you is what do I like to look for? I want an uptrend. So of course now I want, so I'm looking for markets in an uptrend. So go figure. So I want an uptrend. I've got an uptrend. I love it when my market goes up and then it goes sideways and then the 50-day moving average catches up to my market. That is exactly what's happened right there. Then I want to see that my market move up, and I want to see momentum coming in, pushing it up. I measure that momentum a number of different ways. The kahuna is a percent B change more than 0.24. A dark one is 0.4. This one here is a MOBO breakout from David Elliott. This yellow tells me I'm in a squeeze, so I knew there was a lot of spring contraction ready to leap. Here are my bongos. So what I want to see when I'm looking at a stock to buy or to be long or short an index, I want an uptrend. We are in an uptrend. I like to see it going sideways and basing a little bit, which reduces my risk. I want to see it pull back to a major support, and this is the major support. And then I want to buy it, sorry about that, when it takes off with momentum, which is what happened on Wednesday. And as you could see, on Wednesday, we had a kahuna, a MOBO breakout from a squeeze. We've been in a weekly bongo that's green that tells me I'm in an uptrend, and my daily bongo went green as well. So a lot for me to like of what happened in the S&P on Wednesday. You also had these red dots switch to a green dot, which is Wells Wilder's PSAR reversal. So the S&P looks strong, yes. Let's talk about the negative. I want to be fair, balanced, and don't want to come off as Jeffrey the Perma Bull, which I probably sound like. Here's where we bottomed in November at the election. So we are up 18% on the S&P. We've had a couple of corrections. This correction here was 3.1%. This correction here was 2%. This correction here was 2%. At some point, one would expect at least a 5% correction. So we are ripe from a correction from that perspective. The other thing I want to point out is the high jump bar here, which measures extension. It's basically the closing price from the 17, closing price from the 50, closing price from the 200. We add the three of them together. In HGSI, we're plotting where the top of this yellow area is the highest high jump of the year. In TradeStation, I actually quantify what percentage of the highest one. And what we talked about before is we're not at all close. We're at 66%. So I see a lot to like here on the E-minis, S&P, and again, on Wednesday, I saw my signal to go long. The Dow Jones Industrial Average looks a lot like the S&P. Out of curiosity, from the bottom to the top, the Dow Jones is up 21%. And again, a number of small pullbacks, but you know, we're at a closing high. There's nobody has waiting for it to go higher to sell because they're underwater. It had a kahuna come in on Wednesday. Everything is green. The Dow looks strong here. I go down to the NASDAQ, or up to the NASDAQ here. And what do I see? I see a NASDAQ that from the lows to the close, give or take, about 25% return. And you look at some of these pullbacks. Here's one that was 4%, and that's the biggest one. So we've gone the better part of 10 months, 9 months without a significant pullback. That's the argument for it's a correction in my mind. It's not the fact that the high jump bar is too high. Notice on the NASDAQ, we have not flipped the weekly bongo. So that's a little bit of fly in the ointment, but we did move up off a squeeze. A great day on Wednesday with 2 days of follow through. The NASDAQ, to me, I'd rather be a buyer than a seller right here. The Russell had been weak, and then the NASDAQ was weak. The problem with the Russell, and I'm just going to go back here and start my little analysis. Problem with the Russell. So the Russell has been in a box. Now, the good news is we're hitting the top of the box. We've hit the box top 1, say 2, 3. This is the 4th time. Are we going to break out of the box today, or are we going to pull back into the box? It feels like the market wants to break out of the box. And the reason why I'm bullish about that is Wednesday, kahuna, mobile breakout from a squeeze, no pressure from the high jump. So the Russell looks like it wants to break out as well. But it may look like it wants to. I'm going to watch and see what it really does and not expect it to do what I want it to do. Now, very quickly, let's look at the dollar. As we showed you before, the dollar remains weak and in a downfall. If I look at the VIX, you'll see the VIX is kind of down to where it falls to. In fact, this is the lowest going back pretty much a year. Now, if we go to a weekly chart, I got to move over a little bit. You're going back through 14 and it doesn't get this low. This is a very remarkably low VIX. So 2 thoughts about that. 1, it means there's complacency and not a lot of fear in the market. 2, you lose money when the VIX goes up and its next move is likely higher, not lower. But until it goes up, a low VIX isn't going to hurt you. It's when the VIX goes up, it can destroy your portfolio. Gold, you would think it would have popped in light of the U.S. economy and the weak dollar, and it pretty much on Friday, actually that's a weekly, so let me get to a daily, my bad. Had a little bit move up. It's getting into a site of resistance. You notice all the red here. I'm not a buyer of gold here yet. It's going to have to prove itself to me, and I don't think it's proven it yet. If I look at silver, despite, again, the weak dollar, I know it's right in front of my face. You'd be amazed sometimes how hard it is to see something that's obvious when you're doing a webinar. You could see silver clearly in a downtrend below its moving averages. And out of curiosity, gold miners should be mixed because they're both gold and silver, and they're below a series of moving averages. So I am bullish the market until I get signals not to be. I'm not crazy. I may be an idiot, but I'm not, I don't expect it to never come down. I'm always looking for it, but I got to work with what I got. And what I got says the market looks like it wants to go higher. Also a weekend, you don't know what Trump's going to do and what news report's going to come out. But at least at the close on Friday, I thought the market was going higher. Here's another thing that tells you how much strength there is in this market underneath. There are 174 indexes in HGSI. I slice and dice them many ways. I look at 2-day force up. Now, the problem with 2-day force up is a very short term. So I'm looking for short-term momentum. Well, the market was strong the last 3 days. I suspect there's not a lot of downside. 72 upwards on the short-term momentum and only 9 downtime. Banks and diversified banks and steel producers were up early in the week and came back end of the week. Communications equipment, casino and gaming, weakness in China perhaps. Institutional brokers, cement, electronic components. That's where the weakness was. Now, if you look at the AD side, most of them are Bs. And if you look at their 5-day return, only one of them, I think, is negative. So these are the weakest of the market, but not so weak, actually. If I look at the 5-day down, so a longer period of time being down, I have only 8 versus 5 days of 76. So when I see these types of a difference between the 2-day up and down, 5-day up and down, that's super strong, and that supports that this market has some underlying strength. I like to quickly look at the top 10 groups. And what I hope you saw last week is most of the stocks that you end up trading are coming out of those top 10 groups. So highlight an index, right click, change index group, and I'm ranking by force. So the stocks that are moving the most come up to the top. And part of why I had a good return last week, in fact, let me just show you that. More proof that growth is working. That's not the one I wanted to hit. Sorry about that. I already had it loaded up. This was a bunch of the groups that I looked at last week. So the first thing I noticed, see if I can make this a little smaller. First thing I noticed is that there's very little red. So most of the groups that I track were up, okay? And the S&P 500 was positive 1.41%. I would say for the S&P to be up 1.5%, 1.4%, it is a strong market. The HGS 100 was up 3%, so just pretty much double the market itself. The IBD 50 was up 4.43%. This is a super stud market. My holdings for last week were up 4.16%. If you just look at equal dollar value of the different shares I trade, and my buy list was up 2.76. So when I say it was a week for growth, look at this. Strong earnings per share rank near 52-week high, up 7.35, 24-1 gainers to losers. Quarterly earnings acceleration, 23-2 winners, 7.3. Growth stock, 6.9, 24 out of 25. My all-star stocks, which is just the stocks that ended up on the most bullish list, was up 6.3%, 29 out of 30 winners. All the weeks are not this good. I mean, that's the bottom line. This was an incredible week in the market if you were long. So I was long several of these. We talked about many of them last week, so let's look at them. NVIDIA has been one of the big leaders of this market. You can see from 100, peaking about 170, pull back hard into the 50, undercut it a little bit, which you prefer not to see, but it happens. And then had a couple of pocket pivots in light blue here on Wednesday and Thursday. Kahuna coming out of a squeeze. If you're holding it, you're probably pretty happy you held on to it. I don't like the red weekly bongos, but this is a nice lower left, upper right leader. Good earnings per share growth, probably goes higher. Is that really? All right, it didn't work right. Let me go back here. Try this again. AAOI, this was my stock last week. On Friday, this is what it looked like on Friday, and this is why I was all over it. And what I told you before, is this in an uptrend? Absolutely. Did it pull back to the 50? Absolutely. And what happened on Friday, on Wednesday, or whatever day this was? This may have been Monday, the next day. I guess was this Friday or is this Monday? This was Friday. And I called up my son, told him to buy it as well. It had a kahuna, was right off a pocket pivot, a mobile breakout from a squeeze. So I put a buy order. I actually had some, but I bought more. If it closed above the high or opened above the high on Friday, on Monday, and then despite the red bongo, which converted on Friday on the weekly, it had a great week, great move up, and AAOI still looks good to me with that great earnings per share growth. Micron, kind of a tight lower left, upper right. Looks to me like it wants to run again. Great earnings per share growth. The nice thing about Micron, its earnings are already out. Coherent, another company in this space. And this one I had a position in, and this one really tested my conviction. Fortunately, it was option, so I didn't just bail on it. And it had a pretty steep pullback, and it bounced to get to new highs on Friday. I think Coherent goes to 300. I like Coherent here, another great earnings per share growth. Intel, a laggard. AMD, as much as I like AMD, it doesn't seem to really go anywhere. I mean, look at this over a period of time. It's really in a box. And then Broadcom, another great stock that pulled back and hasn't not yet broke out to new highs. So I still think this is the place to be in semiconductors. Exploration and production, I'm not going to show you great charts because they don't exist. Here's Encana. Stock is in a downtrend like the rest of the group, way below the 200-day moving average. The weekly bond goes red. Yep, it's in a short-term uptrend. I like to see it get above the 50 before I got excited, and it does have some earnings per share growth. Devon is, perhaps bounced off the bottom here. Lots of resistance on the way up. Halcon sold some assets, which caused it to gap up, not really doing anything. Overall, exploration production doesn't look that exciting. Now, is this a time to go fishing for some of the recent great performers like Diamondback with great earnings per share growth? Maybe. And I may be considering that on my portfolio, but I don't know when they're done going down. And this is a place that will chew you up in these patterns. So despite it being in the second ranked group, I'm not a big fan of exploration today. Services look a little bit better, again, deep in their patterns. Baker Hughes with a new relationship with GE had a nice move here on Friday. I don't know what the new stock ticker is and whether this is it, so I'm going to skip it. Halliburton and Schlumberger, the giants, big pullbacks. Is this a bottom? Well, I could have asked the same question there. Hard to own these things big, except look at the EPS growth, and they'll probably go up before oil stabilizes. I'm just not sure when. And I've had pieces of this over time. Schlumberger, the same pattern, still in a pretty deep downtrend. This one looked more interesting, SPN, which is a small stock that loses money. And the reason why it looked interesting is it broke above the 50-day moving average. Not a perfect pattern. It's way too deep in it. But if you want to play here, this looks like a spot that might be interesting. Sorry about that. I had a dog scratching emergency where he's on a very fancy couch and he decided he was going to find a place he liked by scratching, which I'm glad I'm not a dog, although he's got a pretty good life. REITs. I'm troubled here. They pay a dividend here, Simon Property Group. Problem is Simon owns one of the local malls. There's big vacancies, and what happens to the big box stores? They talk about turning them into roller rinks and hospitals and clinics. I'm not sure that I want to be owning any of these REITs that own shopping centers. That said, apartment REITs might be okay, lower income housing REITs, REITs that own medical facilities, REITs that own cell towers, REITs that own or run the colos, the centers for the technology, but not shopping centers. So here's a stock that's been in a fairly consistent downtrend for some time. Simon Property Group, since peaking here back in September a year ago. This is a shopping center owner. It's got good earnings per share growth, pays a nice dividend. I'm afraid of them. Maybe I'm just a big chicken. Here's another REIT, 3.7% dividend. What does this one do? General Growth Properties, more retail properties. So the retail properties look like they're bouncing. I don't know if it's just a technical bounce. Here's an expensive REIT. This is American Tower. They own cell towers. Look at the earnings per share growth, pays a 2% dividend. I'd rather have bought it here than buying it where it's at. It doesn't tell me what they're into. This pays a 4.5% dividend. I look at these, I don't get excited. If you've been watching me for any length of time, you know I've been in and out of Cone. There are some interesting pieces here. Iron Mountain is in the paper business of coming into offices and shredding, not tied to shopping centers, pays a 6.3% dividend, has good earnings per share growth. Company has grown over the last 2 years, a couple hundred million a quarter. Something like that might be attractive to me, especially with that dividend. Well Tower, I remember looking at this last time, medical office building, inpatient, outpatient medical facilities, sitting on the 50, pays a 4.7. REITs might make a lot of sense, especially if you like the dividends. I just have a hard time buying a REIT that has retail. Computer hardware. Here's a stock that I did one of my, quote, chicken shit spreads on, where I buy a call and then I sell a put at the same price, and then I buy a protective put to reduce my margin exposure. And it's funny, I took the trade all the way back here where it had one of my moves off the 50 with a kahuna, and it's really done nothing. And then last week, starting on Wednesday, it started moving, and now come July, I'll probably roll it. But you could see the weekly bongos turn green. We had a Bible gap up on Friday. It's had great earnings per share growth, pays a small dividend. Network Appliances, NTAP. Western Digital has been a leader for some time, uptrend sideways, breaking out here. Hewlett Packard, trying to retake the 50. Seagate, not so nice. So in that group, I like Western Digital, and I still like NetApp. Semiconductor manufacturers, this is all about applied materials. These guys took it harder than the semiconductor stocks and are just fighting their way back. But look at the move Applied Materials had, and it's back. It's still in a weekly bongo down. It's had a pocket pivot and a kahuna. Still makes money, higher than its earnings per share growth. Small dividend. Not as excited as the plain semiconductors. See if any of these stand out. ASML, it's big, expensive stock, breaking out to new highs. Tower Semiconductor looks interesting as well. So two semiconductors, one for manufacturing and one for devices. Telecommunication companies, again, these will be about dividends, and in Sprint's case, there's always a discussion about M&A. Sitting at a great spot, a squeeze, mobile breakout, and a kahuna. Big up day on Friday, long-term in a downtrend with a bongo red being a sell signal. Something's going on with Sprint. I don't know enough to be playing. Look at the volume. Frontier, if this thing doesn't go bankrupt, it pays a 16.2% dividend. Its relative strength rank is a big one. It's down 81% over the last year. I don't care how big the dividend is. It can't make up for dropping 81%. So I skipped. Look at the earnings per share growth and losses. Verizon, also at low in its pattern, but pays a 5.3% dividend. T-Mobile's pulled back towards the 200. It does not pay a dividend. So I look at these and I scratch my head and I go, why are they there? Sprint had a good day. It's just, I'm not sure it's what I want to be playing. Internet media. So the oil may be hurting Russia, but they're still using their internet because Yandex, which is a Russian internet company, had a Bible gap up on Thursday. It has not dropped below the bottom of that Bible gap day. It's got good earnings per share growth. It was in an uptrend. If you were to buy this, and it's not a low risk buy, you wouldn't want to let it get much below the low of the gap up day. Facebook, I own some of this. It's been a nice leader. It's had a great move off the bottom. I've taken some profits, and every time I take profits here in Facebook, I always live to regret it because it keeps going higher. But you can't buy stuff with shares. You got to cash them in to buy toys or to buy something else. Up 44% since the bottom of the market. No wonder it's grown as a percentage of my portfolio. Nice uptrend. It's probably expensive here. It's got earnings coming very soon, July 26th. Why? Maybe an interesting thing to look at. Great earnings per share growth. Good demand this week. Everything is green. It had a move out of a mobile breakup from a squeeze and a kahuna. It's already had its move and getting extended, which is the problem. It'd be nice if you could get it to pull back some. This may not give you a choice. If you open up a weekly, I think it's important to see that it's only a little bit up from where it's fallen. So I think this one has room to go, and its earnings per share growth is higher than its growth rate, is its multiple rather. To me, that's a sign of a stock that can go higher. And then Google has retaken its 50. I guess Amazon won the race to 1,000. I'm sure 1,000 is in the sights for this stock as well. I'm not a Twitter guy. I still don't use it. I don't understand why people bother with it, but I know people like Twitter. And it's interesting because I don't pay much attention to the stock, but it had a little bit of a move on Friday. Now, it doesn't have a lot of pent-up earnings. Again, I don't know if I understand their business model, but if I look at this from a technical perspective, it's breaking out here with multiple pocket pivots. One that I got back into is Weibo. Why? Uptrend, pull back to the 50, multiple pocket pivots and a kahuna. And I think this one goes higher, great earnings per share growth, but also high PE. I continue to go down my list. MLP showed up probably like the REITs because of their dividends. A couple of them are actually looking like they want to do some breaking out. Here's Kinder Morgan, certainly down in the pattern, 2.6% dividend. One OK is breaking above the 200-day moving average, pays 4.6. Williams Brothers pays a 3.8 and is in a short uptrend now, unlike most of its others. And then here's another ETE. This is the one that I'm holding, sitting sort of on its moving averages, pays a 6.3% dividend. And lastly, in my top 10 were automobiles, and can you say Tesla, although many of the others made this list as well. Boy, this is a volatile stock. Probably goes higher here, but I'm not in this one. I don't know. I love my Model X. I'm so glad I own a Tesla. It was expensive when I put everything together, but I don't get the company, their acquisition of Solar City, tunnels, all these things that they're doing, bizarre, yet it's a great company, and I just think the stock's expensive. Looking at the other car manufacturers, GM, moving up off of moving averages, everything's green with a pocket pivot. I don't like its earnings per share growth. Ford, below the 200, 5% dividend. That's interesting. It looks like it wants to retake its 200. And then this guy's been on fire. Ferrari's been on fire. Fiat, uptrend, sideways, breaking out pocket pivots. That might be an interesting thing to look at from a technical perspective. Here's the one that's been on fire. Ferrari, you can't afford a Ferrari, but you can buy a share of stock. Here is my buy signal. Pull back to the 50, and then breaks out with a kahuna and a pocket pivot. So those were the 10 groups. I'm getting tired. You're probably tired of listening to me. Let's just look at my buy list very quickly. So there's anything I want to talk to you about. In fact, let's go rapid fire through these, and then we'll say goodbye. AAOI, we've already talked about. Love it. NetApp, already talked about. Micron, we already talked about. YY, we already talked about. Coherent, we already talked about. C-Trip, I look at this as kind of like a Chinese price line. It's got earnings per share growth. Uptrend, pull back to the 50. Pocket pivot, kahunas, turn green on the bongos. Looks like it's breaking out. I'm going to be watching C-Trip very closely. Look from 6 of 15 to 3 of 17. The consistent growth in the quarterly revenue. First Solar, I guess, is a technology play and an energy play. Broke out back here, as did SunPower. Looks like it wants to go higher, multiple pocket pivots, green sailing on the bongos. UPS broke above the 200, everything is green, mobile breakout from a squeeze, pocket pivots and kahunas, a 3% dividend. Weibo, we just looked at. SPN was that energy stock breaking above the 200. Tower, I already pointed out to you. Analog Devices, another stock pulling back, sitting on the 50. I don't know, this made my list. Now, actually it did because it's a high close doji on the daily, and I think on the weekly as well. Yep, a high close doji on the weekly. Delta Airlines earnings are now out. Earnings were fine. These things are changing dramatically. Their PRASM, which have been quarter over quarter, year over year negatives, are now getting positive. They're going to make more money, and this is supposedly as a holding year for Delta, and it actually beat expectations. I think Delta goes higher. Here's another technology play. Tight move off the 50, pull back towards the 50, had a kahuna on Friday from a squeeze. Cognizant Technology. My son brought this one to me. I looked at it the week before. Nice earnings per share growth, pays a small dividend. I would have rather bought it last week on Monday. I'll buy it if it pulls back some. Blackstone Group, I mentioned this earlier, pays a 10% dividend, but its earnings are Thursday, so you have to be careful. One thing I like about Blackstone is I've been in the stock for a long time. They've maintained a strong dividend, even in the market pullbacks. You're buying Blackstone when it's cheap at this point. So let it get through earnings unless you want to play earnings roulette. Usually isn't a big mover on the stock. Blackstone looks interesting. Beat is another one my son talked to me about. He called it a cup and a handle and a breakout. He's probably correct. It's an IBD 50 type of stock. Pocket pivots, kahuna, and a mobile breakout. This is another one I spotted last week and I bought. I don't know if I talked about it on my webinar. The problem with this stock was when I was looking at it on, this is where it was on Friday, all-time new high breakout. Just a risky buy. It has great earnings per share growth on MarketSmith. The demand to supply 9.1%, which is very high. I took a chance on it. It was a high risk buy. I got rewarded. Still looks good. Proof point, I actually sold this on Friday early in the day when CyberArk really screwed the pooch on its earnings on Thursday night. And of course, I blew that one because it had a nice move on Friday with a kahuna and a pocket pivot. I'll be looking to potentially get back in. I don't like the earnings per share growth. Read some things about on the weekend, look good. DDR is one of these REITs. This is clearly a bottom fishing play. Great earnings, pays 7.9% dividend, and it's not a shopping center REIT. Actually, it is a shopping center REIT, I'm sorry. The reason why I like this one is I was going to pick one. It was cheap. It had a big dividend, and it seems to be found a bottom. Insurance companies didn't make my top 10, but what a tight lower left, upper right Progressive Insurance. Here's a Eurozone ETF, uptrend sideways to the 50 and a move off. Same pattern over and over again. This is EZU. Here's another MLP sideways breaking out here. Dividend is 6%. Sina, a Chinese game player. And that's one thing to point out. There's a lot of Chinese stocks here. And we'll look at my list in a second. Pull back to the 50 here. Not a tight pattern. Mobile breakouts, pocket pivots. Looks like it wants to go higher. Here's another semiconductor stock pulling into the 50. I mentioned that I was curious about Diamondback, so it's on my watch list. Here's another MLP. And here's the other expensive, high-growth energy play that's sitting on my watch list that these have done well in the past. They still have great earnings per share growth. These are kind of things I look to pick up on a discount. And if you look at the pattern here, sort of a Darvis box, you want to buy them when they get down here and sell them when they get up here. So I may nibble on this guy before the week is over. Viva Systems, I don't love their fundamentals. Their earnings per share growth seems to be slowing down. But what a beautiful lower left, upper right, pull back into the 50, a bunch of pocket pivots. This one looks to be going higher. Here's another oil services company. I picked this one because of its earnings per share growth. Kind of a loose pattern here, but staying above its moving averages. I talked about Brazil. This is a iron ore stock. It used to be called Rio, Vale, V-A-L-E, 3% dividend, buying it off of support, which is where you like to buy things. Here's a Euro stock, 50 spider, pull back to the 50, looks like it wants to go higher. Jabil Circuit, another technology play, moving up off a confluence of moving averages. Church and Dwight, makes household products, moving up off the 50, PSAR reversal and a kahuna. Momo, it's been a stock I've been in and out of. Looks like it might be time to get back in. Truth be told, it's still going sideways, so you might want to wait till a more definitive breakout. Enbridge, another MLP, deep in its pattern with a kahuna, 8.4% dividend. American Axle, also deep in its pattern, but a nice little move from 14 up here to 17. Don't like the earnings per share growth. Here's why I liked it. Big, high close doji with the OBV switching above its moving average. So there's things I liked about it. BCE, a telecommunications company with a 4.6% dividend. Huntsman, specialty chemicals, gradual uptrend. DR Horton, a builder, it's in a flag here, so I wouldn't touch it until it breaks out of the flag. It's one of the things that Guy Cohen has some neat tools for, but you got a flag sitting here, a pennant, and if break out of here, one would expect it to do another 3.5 points up if it breaks out of that flag. So I'm watching DH Horton to break the flag. And then there's another stock whose pattern I found interesting, another semiconductor stock, a cheap one, Kohu, might be a good one for my son, being that it's cheap. Broke above the 50. It is kind of loosey-goosey here, but it had 2 kahunas last week, and I learned from Ian, if I see multiple kahunas, that's something to pay attention to, and it's got great earnings per share growth. Southern Peru Copper, here's another Latin American play and a base metal play. Bongo went green, breaking up above the 50, great earnings per share growth, small dividend. Here's another semiconductor stock that we talked about last week, which would have been a good buy. Kemet, probably still a good buy. Cooper Tire and Rubber, another one of these stocks where you buy them cheap and sell them expensive. This is at that point where you like to buy. And again, looking at some of John's stuff, if you look at it on a weekly basis, it's got a high close doji here sitting right at the 50. That looked interesting to me. Another pullback and buying it off of support, Scorpio Bulker, something I'm going to be watching this week. And we're probably getting near the end because I'm getting tired. Symantec, infrastructure software, broke above the 50, multiple kahunas and pocket pivots. Here's a South American oil company. Yes, it's a sideways play with a small dividend. It's got great earnings per share growth. Here's a stock that I'm going to skip that one and that one. And then here's another insurance play, XL, lower left, upper right, 1.9% dividend. And lastly, another insurance play that I probably shouldn't be looking at here. All right, so we've gone through the majority of my buy list. Obviously, the ones at the top have the higher combo rank are the ones that I like better. What do I do with these? It's simple. I stick these into a watch list, and this is not a good resolution, so excuse me. And then I basically watch them, and I watch for signals throughout the day popping up like high and low close dojis, PPS buy and sell signals. I look at daily, I look at weekly, and then I have my traditional HGSI radars that will look at squeezes, mobile breakouts, etc. And when I see something that starts to flash, I pay attention to it. On that note, I'd like to thank you for being here. We'll say good night. We'll see you next week. So again, I am certainly feeling bullish going into next week. However, I also know that it's July. We got August, September, and October coming. We've got earnings season coming. This is a market that keeps wanting to go. Goodbye.